Hey, welcome to the Publish, Promote, Profit podcast with me, Rob Kosberg. Every week, I interview thought leaders and experts who have used a book to grow their income and their impact. So tune in weekly for these interviews so you can learn how to use your own best-selling book and go from hunting for clients and opportunities to instead being the hunted. Hey, welcome everybody. It's Rob here with another episode of the Publish, Promote, Profit podcast. I have a great guest for you today that I think you're going to learn a tremendous amount from. Kison Patel is the founder and CEO of M&A Science and has a passion to drive the M&A industry forward. He's the best-selling author of a couple of books, Agile M&A and M&A Tactics. Also has a great podcast, the M&A Science podcast. And I just learned that you have a leadership podcast as well, which is cool. Perhaps we can talk about that. But you were an M&A advisor for 10 years in which you sold larger companies such as commercial banks, hotel chains, et cetera. And you noticed, the lack of efficient technology to manage deals, and so created your company DealRoom as well, which is a management platform for M&A. So thanks Kison, for being on the podcast, and look forward to chatting with you today.
Hey, my pleasure, Rob. Thanks for having me.
A lot of people that are listening are small business owners, and I want to get this right out of the way because some people may start to listen and go, I'm not the size of a commercial bank or what have you. But, one of the biggest, I'd say, probably Achilles heel of a small business, and I'll call small business, anything over $1 million, $3 million, $5 million. But one of the biggest, I think, Achilles heel that I have seen with clients that I serve that have $5 million a year businesses is they don't really have a way to, or a plan to exit their business. And, in essence, M&A is about exiting, whether it's someone that started a larger company or someone that started a smaller company. I wonder if you can speak to that just for a few minutes, because I'm sure you've seen that in what you do as well.
Yeah, today our practice is built around working with corporate M&A. So we're dealing with large billion-plus market cap companies, but I've been an operator of small businesses for 2 decades now. And looking back and combining perspectives from both sides, Rob, I think it's a good exercise at least once a year to look at your business and think about who would be potential acquirers, just to keep that as an exercise and not necessarily anything to act on, but at least keep it in mind so that you're conscious about that landscape. What does that look like?
Yeah.
Who would they be on the strategic side? That would be large organizations that would find unique value and pay a premium for your organization. Who could it be on the private equity side that are focused in your industry and actively making investments there? Or even beyond that, what would that look like? I think it's good to at least know of it. And then as you get closer to making a decision to go down that path, there's a series of steps that you want to do to really prepare yourself. And if we look at the number one falters and why selling a business goes wrong, the preparation wasn't there. That, like even a house, right? You want to do a lot of house cleaning and get it in the most presentable form for prospective buyers to come in. And you see the savvy realtors even stage a house if it's empty just to give it the best look and feel to get the best price. Similar with the business. When it comes to having prospective buyers look at it, you want the sophisticated buyers, and they're going to do sophisticated diligence and really get into the nooks and crannies of your business. And the better prepared you have it for them to do that, the better it's going to show, and then likeliness to have a better value associated with it.
I spent some time with an M&A guy that focused more on smaller businesses, and I really learned a lot from what he said, because I've run small businesses my entire life, but I've done the very thing that I've seen others do, and that's not think about an exit plan or an exit strategy. And I don't want to have the same exit that I had out of real estate in 2007 and 2008. That was not a favorable exit. But one of the things that was interesting to me is he talked about, what exactly along the point you're making, what a lot of even multi-million-dollar businesses look at when they think about selling it is they think about, maybe selling it to their competition, or maybe selling it to, an employee in-house, or maybe doing something like that. And he said, look, that is the absolute worst thing that you could, in most cases, think about doing. Now, there may be exceptions to that. He said, instead, you really need to think about what it looks like from a strategic perspective for somebody to buy your company. And a competitor perhaps could be that person, but in most cases, that may be somebody completely off the radar of the same industry you're in. And it really opened my eyes to, I guess, how much work needs to be done from a strategic perspective to really think about who it is that could be purchasing your business. Can you maybe elaborate on that a little bit? Like, what are the questions that you ask yourself or, the business owner that gets them thinking along these lines?
Yeah, it's a tough one. This is where I think expanding out, talking to other executives, trying to get these ideas, because you'll get boxed in if you just sit there in a corner trying to figure that out on your own. This is where some of the M&A advisors or bankers are helpful, despite, nobody likes to pay their deal fees. But in terms of their experience and knowing that buyer universe, you can get some of those ideas, because you may come up with, hey, here's the big players in the space I play in, and they're obvious. And frankly, you can connect with their corporate development teams. I mean, that's their job, is to be out scouting for these inorganic opportunities, typically associated with acquisitions. So being on their radar is something that's what they're supposed to do. They should welcome those conversations. I think there is this universe of firms that could be strategic that aren't so obvious, where maybe they're looking to break into the space. Maybe they're in this adjacent industry that would complement their current business lines. So can you be open-minded about that and try to identify who they are? There's a whole market map exercise that could be worth doing as well, where you map out the vertical you are, then also the verticals adjacent, and really build that logo list of who's involved in those different areas. And then you can extend it with the private equity firms as well. But that might be something good to do as an internal exercise. We talked about thinking about that occasionally, even if it's a yearly activity, and then revisiting that market map and just being able to build off of it.
Yeah. Let me ask you about deal flow and finances and money. I mean, I've heard a lot. Obviously, we have like unprecedented money printing going on, right? I think 40% of all the US dollars in existence have been printed in the last 12 months. I've heard that, M&A mergers and acquisitions are through the roof, and they've continued to be, I guess, chasing the money or have the money to chase these opportunities. Can you speak about that a little bit? How does that affect, because like any industry, I'm sure it's cyclical, right? I mean, how does that affect the cycles of, up years, down years, et cetera, when it comes to mergers and acquisitions?
It's going to be interesting. I think the same way. I came through the typical cycles everybody would accept, but I've just never seen so much capital in the market right now. When you look at M&A activity, it's highly, highly competitive. If you're going to buy a business through an auction process, I mean, you got to be prepared. There's just a lot of interest in these deals. A lot of the typical formalities are getting cut short, where you got to run a really fast process to get these deals done. So with that, the multipliers are high. I mean, depending on the industry you're in, but you're seeing all-time record high values that are transacted on, and just a lot of future revenue anticipation. It's an interesting market. Looking at, hey, are there triggers that are going to come about that change things down the road? Yes, but it's just really different. We're seeing so much capital in there, and it needs to be deployed. So it's time to do that. The other factors is just the nature of what's driving this M&A. We're seeing a shift from the traditional, we're expanding, getting more market share, to we're acquiring capabilities. We're looking to acquire these up and coming emerging technologies, and even disrupt some of our own business lines so that we can stay relevant. And that's where we're seeing this exponential increase in technology that's emerging, but right behind it's M&A activity. So there's that trend that's happening that I think is going to keep M&A strong for the long run. But I mean, hopefully we see some cyclical, changes as well, because I think it's inevitable. It needs to happen.
Yeah, well, I mean, in essence, what you're describing is an incredible seller's market right now, right?
Absolutely.
You have all this money chasing the deals. So you're saying the deals are getting done faster, which oftentimes means maybe less due diligence than what they would normally maybe go through that process, or they're expecting to do it all in a faster basis. So when you talk about like a shift or trend shift, you mean like a shift from we've had a really strong seller's market for a time. Now maybe there needs to be a little bit more of a buyer's market and valuations need to come down. Do you see that happening?
It is, but it's just the valuation thing throws me off. I don't know given what companies are buying businesses for today, if that's going to happen. Are we creating some new standards around the way we value businesses? It's just things are changing. So I'm interested to see. I don't like putting these sort of positions out there that I'm not fully confident in. I'm really excited and interested to see what happens.
Yeah. I guess so. You're on the forefront of it. So especially with DealRoom, because I imagine, you're not just dealing with your own deals now, but all of the mergers and acquisitions executives that are using DealRoom and running their deal flow through it. Must be cool to see the data on all of that stuff.
With the nature of confidentiality, we only get so much.
Right.
We don't actually know what happens unless we connect the dots and what gets announced. Thinking about one thing, Rob, is the nature of doing deals. It's shifting from, hey, I'm trying to think of a good way to explain this. Let me get back to it. I wanted to kind of frame like what are the fundamentals that are driving these deals?
Yeah,
are changing, and it's I want to come up with a better way to explain it. I think that's like where it's not going back to the same just because of that. Like there's all these drivers that are changing the way we're looking at deals. Okay, so let's put it this way. Traditionally, we buy a company on a multiplier, EBITDA multiplier.
Right.
That's a financial investment. I'm buying it for financial investment. After that, I grow the business, and that's how I make a return on it. And today's market is so competitive, you virtually can't buy a business on those same financial metrics. You need to model in some synergies. Like if you don't have a clear plan on a significant, detailed, or a defined approach on how you're going to create value acquiring a business, you don't have no business to buy anything in this market right now.
Right.
But that's where it's like, is that going to change?
Right.
Because is that the new environment we live in where the only way it makes sense to buy a business if you have some clear advantage on what you're going to do after you buy the business that's going to create value? And that's always, so essentially you got to act and think like a strategic. And to get in now, you're going to be paying a higher bar entry to be able to get in and act like a strategic.
Right.
So that's what I think is fundamentally changing this market. That we had it good with the opportunities to come in as a financial buyer. It's all out the door. You essentially need to come in as a strategic and have some unique position to create value after you complete your transaction.
That's good. I guess in the past, or at different parts of the cycle, you would see people maybe rolling up similar companies and purchasing the revenue, in essence, right? They're going to a higher dollar amount, which that may give them a greater market cap, a greater multiple, perhaps. And so it sounds like you're saying that's not happening anymore. It's more about the synergies. It's more about, what is intangible somehow being modeled into the whole process. Maybe there's economies of scale in a situation, as well as something strategic that's not on the surface of just buying. You're not buying revenue anymore.
Yes, exactly. Like you got to do something. Those days are gone. Those were the good old days where you could buy something on some financial metrics that made a lot of sense.
Right.
You're buying a business and can leverage the heck out of it and know you got enough cash flow coming in to pay off your debt on a monthly basis. You can't buy businesses like that right now. And I would say if it's a market that's an auction nature to it, right? I think there is actively today, if you're an acquirer, you should be developing your own proprietary pipeline. And I think that's another shift, that if companies have to, you don't have a choice because it's so competitive with the marketed deals. If you're a smaller outfit, you don't stand a chance. Your best bet is to hone in on an industry that you really want to focus on and find your own opportunities. Right. Go directly, network with the CEOs. That was the one thing I learned, Rob, is don't go to CEOs and say, hey, do you want to sell your business? ask them for who knows if they know anybody that's going to sell their business, because they'll come out and tell you, even if they are. But always say, hey, I'm really interested in your business. Build your story. I'm interested in this sector. Hey, you being a veteran in the sector, love to pick your brain. Love to see if maybe you know some opportunities I can invest and get in, and see if you can find something on your own. That might be your best bet, because you can find like a unique circumstance where somebody's an operator and you build some rapport or relationship with them, and they're essentially looking to retire. They're looking for next, and now all of a sudden you can create some owner terms and take over this business that may be more structured on some logical finances that make sense. And there's a nice mutual, hey, I'm looking to get an exit, but I'm also looking to make sure the business goes in the right direction as an owner that's going to take it to a good place.
Yeah.
That is the big trade-off too when you're exiting, is you got a big check coming out of it, but is that business going to go the direction that you want it to?
Right.
Are people going to get taken care of?
It's interesting. You gave kind of an old school, but very effective way, to create some deal flow for yourself, right? I mean, you're talking about maybe not cold calling, cold emailing, cold outreach. That's actually a process that we talk to our clients about a lot when they're trying to get speaking engagements, using their book to frame them and position them in their industry as an expert, sending their book on ahead of them, whether it's direct mail. I prefer that over email, but email could be a way to do it. I wonder, is that with the methodology you just talked about, you're approaching CEOs, right? C-suite executives. They're not going to want to talk to just anybody. I imagine that there's some type of due diligence, or they want to know that who they're speaking to is not a waste of time for them. Either A, how do you do that? Or B, have you seen people use their books to kind of frame those conversations ahead of time?
Yeah, it really, really depends. I guess it's a big variable in the context of all of this. If the book's a reference point, it definitely adds a lot of credibility. And if it's related to the subject, that can be definitely helpful to open up a conversation. I think the channels are changing. You sort of gave some examples, or maybe not calling, maybe emailing. Yeah. Well, I found LinkedIn to be very successful of the past 4 or 5 years, and rely on it heavily, even accessing public company CEOs. So that part's changing. I think building out your profile as well, and looking at it from the other person's perspective on why I would want to speak to this person. So really trying to button that up as much as you can. Yeah. And, even if there's little things where you may had some roles that don't look great in the onset, but can you at least add some bullet points of some achievements that you made? So really outline that you're a person that takes opportunities and creates the most out of them. So I think that part, and then the book, really depends. We published 2 books. One was Agile M&A, and then the second one is M&A Tactics. The first book we published was starting to pick up on this trend in the industry of ideas from the software and how they project manage using Agile as various Agile techniques and that as an approach, and drawing parallels of how it could be related to our industry, mergers and acquisitions. And validated it with some case studies with organizations like Google and Atlassian that are actually using these Agile techniques in their M&A approach, and essentially wrote a book, but made it into a framework to help other corporations adopt those same kind of practices. And that led to a lot of speaking engagements, probably more so with other like large organizations that had initiatives to move to more of an Agile type of model. And that was something we caught early as a trend, owned it. We took it even before the big consulting firms and saying, hey, let's build some expertise around this and get some trademark and IPs. And then we ended up taking that to market. But now we sort of had that domain focus. So when we do go to conversations, that it's a nice reference point. I think it's great too, as with business development, we can always hand this out and saying, hey, I know you're interested in the software, but adjacent to this are practices that are related. We'd love to just share some content that we published to help maybe provide some ideas around areas that you could apply in your own practice.
Love that. I want to go a little deeper on that, because you hit on a couple of things that are really interesting to me. So one, you talked about your book on a simple kind of basis, getting you speaking engagements in front of these audiences. I wonder, I know you have DealRoom, and that's your software. And so that is, in essence, your answer to the Agile M&A problem, right? You're giving them the frameworks within DealRoom to follow an Agile process. Is that accurate?
I would say there's practices, and the software helps standardize those practices.
Okay, good. And so you got the software. It also sounds like you do consulting, or coaching wouldn't be the right word. I would guess consulting around the process for M&A firms. Is that accurate?
We do light consulting that's essentially included when we provide or work with customers on the software side. We give a lot of talks and presentations. We sell the books. We run an academy program, provide training resources. But I've not gone to a full-on service offering yet.
Gotcha.
Yeah, I feel like at this point we're the picks and shovels, vendor in the industry, and provide all the educational resources and technology tools. We started as just, I think one way to think of it, Rob, is the problems you solve, right? When we first started, we initially had DealRoom as a software to solve the problem of managing due diligence on a large-scale acquisition. And even within that, we realized that the investment banks weren't the early adopters, actually the corporations.
Yeah.
And then as we continued to work with them, we identified other issues, like the whole integration after you buy the company is another big complex process that's even a bigger challenge. Started solving for that. And then after that, we was solving for the front end of the process, the pipeline management. You got 3 or 4 deals you're working on. That gets a little messy to coordinate, and even the whole prospecting piece. So really evolved that solution into a lifecycle management solution, combining all these different areas. And that continues. And we realized here's the access to the educational material was lacking in our industry. That there's only a handful of workshops that were accessible. They didn't have the depth to be practical for most practitioners. So we looked at that as a big white space and ended up creating an academy solution for that area. And then it keeps evolving. So when we look at services, I think there's a huge opportunity to get in there, and slowly and surely. But the idea is to prioritize by the problems that we're solving. And then I think where we're at now is the enablement piece. We build solutions out, but how do you really enable it for these prospective customers and help them get the value? And we even see it today where we may have even sold a solution and go back to the customer and realize, hey, they've only gotten not the full value that we've intended for. Now, how do we go back and really enable that? And I think that's where the opportunity for services comes in. That if you can make sure that it's clear and how it's going to make an impact and increase value, then it's worth pursuing.
Yeah, I want to make sure I have this right, because I really like what you're saying. It sounds to me, from what I just heard, that you wrote the book, and the book laid the groundwork for your IP, your trademarks, right? What you were building from there, or maybe at the same time. Timeline maybe isn't as important, but from there you had the software, the academy, then like your course creation, teaching the IP to others, and then the perhaps last piece of this might be a very, very high ticket, direct consultation for somebody that just says, look, I don't want to. Other than going through your book and seeing that you're the legitimate leader in this category, I only want to write you a check and have you come and implement into my organization. At some point, you may be doing that. So is that what you did with your book, and kind of how the frameworks were laid out?
Yeah, that's where it's evolving. On the book part, the value of doing a book, it's not so much the book sales, the credibility. Yeah, that's there. But it helps flesh out your ideas. When you get this, hey, I've decided to create a book, now all of a sudden you have this approach to a variety of different subject matter experts that you can reach out to. I'm working on a 3rd book now, and that's all I'm doing is saying, hey, I'm working on this book about this topic. I know you're somebody in the space that I should be talking to.
Yeah.
And can we grab some time? And most people are happy to do that. I'm going to cite you. I'm going to quote you and reference you for anything material that I gained from our conversation. So I think that's the one thing, is it gives you access now to go out and reach a whole bunch of subject matter experts, build your network. At the same time, you're gathering information to help with your book, but it helps you. It makes you a better subject matter expert. And just knowing these people, because now I can go to people and saying, look, if I can't solve this, I know who can. So we'll figure this out regardless, because we've developed this huge network. I think within our industry, I mean, I was looking the other day, it was like 800 or 900 contacts of all these folks that we've touched over the past 10 years and now are part of the network that we can reach out and get access to if we need help in certain areas. And then that's when you start thinking broader about the different solutions that you can provide to the community as a whole. Then it goes back to that whole enablement piece. For us, it was a little bit different because we started the technology and then we actually started podcasting soon after and leveraged the podcast. And the idea of the podcast wasn't to create a podcast for the sake of creating a podcast. I think you've gone through this exercise too. You should have a clear mission around it. For us, we identified this underpinning problem in our industry was that the industry itself was very siloed and lacked standardization around best practices, which was interesting because all these companies have their own way of doing M&A, distinctly different from each other. Nobody had the real right way or evidence backing their approach. And so the idea of using a podcast was to enable practitioners to share the lessons learned and in turn allow us to synthesize what are the practices that actually work. Can we find patterns and identify and start developing and documenting these best practices? And that's what eventually led to that theme around Agile. Because we see the theme here. Well, let's document this and ended up turning into a book because we felt there's enough material there. And then that's how we ended up creating the book. Academy came last. We had a book out in circulation, and the timing of wasn't the best. It was January of 2020, so shortly after the country goes in lockdown, and I was hoping people had more time to read, but that didn't really impact book sales as much. So we started doing some virtual events, and those actually picked up pretty well because people had time and they're interested in some of the more of the interactive media. And then we ended up identifying the white space actually based off of surveys from those events that we're doing.
Yeah.
And we'd ask for feedback, and it's like, hey, if you can change anything in our industry, what would that be? And people kept referencing learning the practical how-tos of our industry. And it's like, okay, well, we got to change that format a little bit. And we started understanding that whole space in our sector around the continuing education, training, and so forth that led to the model we created today.
Very smart. Very, very smart. We've been kind of talking about this, but I maybe want to ask the question more formally and see if there's anything we missed. And that is, at some point in the podcast, I always want to know, because I'm always speaking to authors, how has your book or how is your book continuing to directly help you in your business? Now, you've shared a number of things already, from speaking engagements to something that not a lot of people talk about, but I'm really glad you mentioned it. And that's, it helps you to formulate your IP. It actually helps you to, think through that. On a going forward basis, there's clearly a benefit. You're writing a third book. So what are you looking for your book to do for you on a going forward basis? Where are you going? How are you looking to use your books? Or are you just letting your books do what they do and you have some deal flow and other things coming to you from them? I'd like to hear if there's a plan for that.
Yeah, it's not so much how it's going to help myself or our company. It's more about how it's going to help the reader. Who's your target audience and what's the value? For us, we knew that first book that people managing M&A didn't have anything to reference. And when they don't have anything to reference, they default to this very plan-driven waterfall approach. And that's not right for our industry. Our industry doesn't work. It's not like building a house where you have a blueprint and you're not going to change much. You go out and build it. When you do M&A, you think of the two guys in first class that make a handshake deal, buy my factory and so forth. And then as you continue the process, just more and more people get involved, more and more information surfaces. And you need to be able to respond to all this new information coming in, whether it's leading to identify risks, leading to identify opportunities, but you constantly need to act on information and manage details. And that's where there's this tremendous case around Agile as the management approach for our industry. And that's where we wanted the reader to understand that, hey, there is a better way. There's this whole thing that we can borrow a whole set of ideas from the software industry and apply it to M&A.
Right.
And that was the goal with that. And now the more recent book we're working on, we've seen this huge surge of IPOs. And in conjunction with doing an IPO, a lot of those companies are standing up an M&A function that, hey, we're going to raise a large sum of capital. And to deploy that capital, we're going to go beyond organic growth avenues, but we're going to find these inorganic opportunities through acquisitions. And what we found is a lot of those teams despite coming from other highly reputable organizations with strong M&A functions, there's no guide for them to follow on how to stand up an M&A function. And they go through a lot of tough lessons and learning curve. And our idea is, well, we've already learned a lot about this. Why don't we get a jump start, start compiling some of the resources? And our goal is to create a reference book with templates to help somebody that's tasked with standing up an M&A function. So I think it goes back to that. What's the value for the reader? What problem are you helping them solve?
Yeah. Love it. Your book has really good reviews, but I saw a 1-star review and I thought it was actually humorous. Everybody gets 1-star reviews. Mother Teresa has over 1,000 1-star reviews on the book she's written, which is, if she has it, then you and I will have it. But the 1-star review I read, which I thought was really funny, was that the book was great, but your upsells were terrible. That you like, I don't know if you saw that, but you didn't lead them to the next thing. Like it almost sounded like somebody was desperate to buy from you, but they didn't feel like you were giving them the next thing to buy. And so in light of that, which, people write 1-star reviews for all kinds of reasons, but in light of that, this is great stuff for people. And, if somebody wants to get your book, then go to Amazon. But where should we send somebody that wants some more information about you, about what you're doing? Obviously, you have DealRoom. How can someone take next steps with you, learn a little bit more?
Yeah, mascience.com. We have over 350 pieces of published content from blogs, ebooks, etc., all publicly available.
Awesome.
But yeah, mascience.com. Got tons of resources there.
Great. So mascience.com, tons of free resources for people to learn more about the industry in itself, to learn more about this Agile type process as well.
Absolutely.
Awesome. Great. Kison, great having you with me today. Thanks so much for taking the time. It was enjoyable. Any final thoughts or words, anything that we missed?
Well, he covered the sort of aspect of putting a book out, our industry, which I'm glad to share. I think a lot of people always associate M&A with the banking parts of it, but I think M&A's got a wide career opportunity. There's so many different roles across the whole process. So I always encourage people to just continue learning, exploring. It's a fun industry. If you think about the largest transactions in the world, they tend to be M&A.
Yeah, if you're going to sell something, why not go to the biggest transactions in the world, right?
It's interesting space. There's not a lot of people trying to solve problems. There's a lot of people trying to put their hand in the pot of gold they see when a transaction happens and get as much as they can. But there's not a lot of people that are actually trying to drive efficiency and build valuable solutions in that space.
Yeah. Awesome. Well, hey, thanks again for being a part. It certainly sounds like you're trying to be part of the solution and not part of the problem. So great to have you with me today on the podcast.
Hey, my pleasure, Rob. Thank you. Anytime.